Hello and welcome to step 7 of our business economics CLIL course about Candyland. Today we talk about the income statement. Well, during your course you should have already made successful sales pitches to various customers dislocated all over the world, and you should have gotten already some manifestation of interest, i.e. demand for your fantastic ice cream candies. So by the time we are looking into income statement, you should have already some revenues, i.e. you should have sold some of your products to foreign customers. The income statement has one main function, i.e. to compute the net income registered by the company during the given accounting period. It's usually prepared at the end of the quarter, at the end of the year. And remember that all the quantities indicated in income statements are flows, i.e. they indicate a flow of revenues or costs that have occurred during a certain period. So for example, in the case of Candyland, starting from the 1st of January 2019 to the 31st of March 2019. So that's a flow of revenues and costs that are economic variables that can produce a profit or a loss. The income statement is also called statement of earnings. Okay. First of all, let's have a look about how you compute the net income. The net income is the difference between total revenues and total costs, also called expenses. Okay. So if your revenues are larger than costs, in that case you have a net income, a profit. If they are lower, you are making a loss. Another important thing to know is that net income adds to shareholders' equity, whereas a net loss subtracts to shareholders' equity. So, positive net income, once you have it, well, you can distribute as dividends, i.e. pay out some of the money you've made to your shareholders, or you can keep it into the firm in the form of retained earnings. Well, the format of income statements can vary. From the accounts, it comes up as a contraposed section version. So you have all the costs on the left side, all the revenues on the right side, and you make revenues minus costs, and you determine the net income. However, usually it's presented in what is called a multi-step format, i.e. there's a series of subtotals that take you from total revenues to net income and give you some intermediate results. Okay, they have a very important role in determining how the company is performing, so they are very good if you need to analyze the income statement of the company. Let's have a first look, and then we'll get into more details in the next lesson. Okay, so the multi-step income statement starts with the first line, which is the value of production, i.e. total revenues plus changes in inventory, actually increases in inventories, i.e. every time our inventories of finished goods or raw materials increases, we add to the value of the production. And then we start subtracting. We start taking out the cost of the goods sold. We get the first intermediate result, which is called the gross margin. Then we have operating expenses. We subtract them from the gross margin, and we get to EBITDA. And we'll see what happens, with EBITDA, what it means in the next lesson. Then we have depreciation. We know about depreciation. It's the amount of fixed cost that has been allocated to this particular period. Okay, and then finally we get to EBIT, which is earnings before interest and taxes, from which we have to subtract interest expenses if they are higher than interest revenues. Clearly, if we are making money with finance, it will be a positive financial addition. Okay. Once we do this, we get to gross income. Gross income is the result of our operations before paying taxes. If we subtract taxes, we get to the net income or the net loss. that the company has produced in the given accounting period. Please take your time to analyze the flow of the accounts. So, most important thing to know is that net income is given by total revenues minus costs. Okay? If it's positive, it increases shareholders' equity. If it's negative, it decreases shareholders' equity. We usually present the income statement in a multi-step format because it tells you a lot about the company. Okay? And we are going to see exactly what it tells us in the next lesson, which is step 8 about income statement analysis. For the time being, I'm over with step 7 of our Candyland CLIL course in business economics. See you soon.